So where are you telling people now the best opportunities are in the bond market?
Well, right now, you know, investing has always been a much more personal idea than most people realize. It has to start from your own return needs and your tolerance for risk. Uh, that said, there are opportunities in callable bonds, bonds with call options. So if interest rates go down, companies can buy the bonds back and reissue bonds at lower rates. Well, the odds
Hmm.
of interest rates going down are much lower. So those callable bonds, which you get a little bit higher premium, most likely aren't going to be called. So there are opportunities in bonds that have those call options on them. For investors in the higher tax brackets, 25, 28% or higher, there's also opportunities in those municipal bonds. Those are federal
Certainly.
income tax free and local and state tax free as well if you live within those jurisdictions. And of course, as always, you want to
Of
hold
course.
those municipal bonds, those tax exempt bonds within your taxable accounts, and your taxable
Of
bonds, like
course.
corporate bonds and other bonds, in retirement accounts to get the best of both tax advantages.
So in the 30 seconds or so we have remaining, what do you tell younger folks that aren't members of the income generation, that are under the age of 50, that say, oh, bonds are for babies, those are for older people, I don't need bonds. What do you tell them, about balancing out their portfolio?
Sure. Well, you always need bonds. If anybody that's been investing over the last 2 decades can tell you that bonds offer an excellent opportunity, considering the wild ride stocks have had. Bonds have returned just over 5% annually over the last 20 years, stocks 8%, but bonds did it with about a
Hmm.
fifth the volatility as stocks. So when you look at that risk adjusted return, bonds are actually a very good bet, and they provide the kind of safety that investors need for when stocks don't play nice.